Coming to the banking sector, it responded well to the pandemic. Indeed, not only did it avoid a crisis, but it was a part also of the support system to the real economy, continued lending support to the real economy. An important part of this good performance is due to the very strong capital and liquidity positions that banks had at the start of the crisis. This is also thanks to the regulatory reforms of the last decade. Actually, banks increased the capital ratios during last year. And you see that in the chart on the left. However, we have not seen yet the full fallout from the crisis. Last year, insolvency have been historically low, thanks to moratoria, the support measures that help borrowers, say, to stay alive and pay back the debt. There are still uncertainties, however, about what happens as those policy measures unwind.
With regard to the banking and fund system in the Eurozone, how have we fared in the pandemic and how were the capital buffers used? This is really my biggest point. And actually, the capital buffers, fortunately, have not really been used. And my point would be that we have not seen our financial system tested. And it was fiscal policy which has shielded the financial system from the stress. And this is why losses didn't occur as feared. And this has an implication on capital buffers and how you view capital buffers, where the ECB went forward, the SSM actually, and was very, very forthcoming and helpful, but the capital buffers weren't used. So it would be interesting to see what the SSM is doing with this regard going forward and how they are reacting to that. My second slight nuance is with regard to climate change, and I do share Sergio's view and the ECB's view that this is the biggest risk. And if it's the biggest risk for the society at large, it has to be a very large risk for the banking and fund sector too. But it's not the ECB who has here the biggest impact. It's of course politics which is setting the course for climate change, and we should not try to put the ECB in a position that it's the ECB. ECB can do what it can do, but it's of course politics who have to fight climate change and who are setting the course.
This crisis, the pandemic crisis, found the global and the euro area banking system in a much better condition than it was at the onset of the global financial crisis. And this was due, we call it the effect, the fact that banks were better capitalized and had better liquidity, and not only higher quality of capital, but mainly capital buffers, which allowed them to absorb losses during this period. One of the causes, not the cause, of the previous of the global financial crisis was the persistent low interest rates in the United States and elsewhere, but especially in the United States. And unfortunately, given the circumstances, and correctly in terms of policy making, we are again in a period of very low interest rates. And as mentioned before, and also commented by Andreas, now in a different environment of higher inflation or inflation expectation.
Obviously, we have seen that this crisis has been kind of well managed so far, because there's been an enormous amount of support by the public sector, by supervisors, by central banks. But what is your, let's say, assessment about when these support measures for the real economy or for the banking system phase out? What type of behavior from the banking system, but also in the real economy, do you expect to take place afterwards?
All in all, we expect that if the situation evolves according to what are now the central expectations, central projection, it appears manageable. Banks have preserved their capital buffer. Andreas mentioned that they haven't used their buffer so far. and even increase them over the last year. And they appear to be able to absorb also further losses, also in case of more negative developments than we expect.